Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to show you how sometimes the markets can be frustrating and show that it doesn't matter how good a trade setup you get or how good the markets look or the position, sometimes they just don't do what's anticipated. And it's important to see this side of the markets rather than just great setups that some other gurus show. But let's start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand that losses can and will and do unfold. It doesn't matter what trading approach you take. I want to have a look today at the NQ, how this has been unfolding on a 24-hour chart. So with MTPredictor, we know and understand that markets are random half the time. So we're only looking for when the markets get a clear, clean picture. And for this, we go to the higher time frame chart. So this is a 3-minute chart. So I'm going to go out to the 15-minute chart. And I want to show you that what we do is we put on our DPs and we can see these areas of support and resistance in advance. So first of all, I want to put a DP off this pivot to show that as the market was going up, there was a potential area of resistance there. If I turn training mode off and then go back to the 3-minute chart, you can see that there was a setup indicated there as indicated by that history triangle. These particular sell setups here weren't great because there was no clear, clean picture in this particular point here going down into that low. So I just wanted to focus on this particular part. And if anything, there'd be buy setups there. So this was a sell setup, so we can place the analysis over the red sell bar there, and you can see that would have taken you into a short trade at the time, and this is the important thing. So let's just go back and jump at the time and have a look at what the situation was at the time. It's always important to not use hindsight. Hindsight is no good for anyone. So can you see how this was a VS sell? Let's clear this all off and put our analysis on. And there you go, that was a VS sell. At our higher time frame resistance, so this looked to be a good trade. We move forward, you would have been taken into a short trade. You then move forward, the market goes up and would have stopped you out. So this is the first important point to understand, that losses can and will and do unfold. It doesn't matter what kind of trading approach you take, there always will be losing trades. But this is why we use position sizing, because here the loss would be only -1R. If the trade had got down to the profit target, which would have been here, the profit would be 5.9 or almost 6 times the initial risk. So that's what we're doing with MTPredictor. We're looking for large profits, but when those large profits don't unfold and the losses come through, we're looking to keep the losses small. So this is the first point of this video, to understand that no matter how good the trade looks, losses can and will and do unfold. Let's turn training mode off. Let's go back to the 15-minute chart and then go back in time. Again, I'll use training mode to go back to here, and we then place a DP off the prior high there, the major high. So this would be the next area we're looking for potential resistance. If I turn training mode off, can you see how the market went up to that level? Caught the high absolutely beautifully, didn't it? The NQ turned at that level absolutely beautifully. So now if I go down to the 3-minute chart, look at this up here. It was lovely the way the market rallied, came right into our 15-minute resistance, started to come down, and it looked like it was coming off that high absolutely beautifully. So now I want to go back to this particular point in here. See, there was a sell set up there as indicated by that history triangle. If I look at this at the time, this looked to be, again, a very nice trade setup. Coming off high time frame resistance, market went down, our MTP trend had gone red. We then had a lovely ABC correction for a TS3 sell. If I place the analysis on, this looked like it could have been a good trade for potentially 5.8R as the market continued down. But let's have a look what happened. You came in to a short trade, the market didn't really go anywhere. It then drifting around, it drifted down a bit, so you were looking like it was going okay. You're sitting on about 4-hour profit. At this point in time, you'd have probably had your stop to break even, but it's still looking good. In other words, at this point in time, it looked good that you were in a short trade, it looked good that it was going to carry on down. If I turn training mode off, let's see what happened. The market had other ideas. In fact, this decline down here was actually only an ABC correction with the low stopping right at the wave C low. before the market started to rally up. So this would probably have been a break-even trade, which is good because you wouldn't have lost any money. But again, the point of this video is to show that no matter how good the trade setup looks at the time, the market sometimes has other ideas. So in this particular case here, it would have been a losing trade. In this particular case here, it would have been a frustrating time because initially it looked like the trade was going with you, but then it would have stopped you out for break even, and basically it's gone up a bit and now it's just basically going sideways. So I wanted to do this video today to show you that with trading, it's not all about good trades. You won't always get good, clean, profitable trades the whole time. There will be times when you get losses, and there will be times when the market is just plain frustrating, and just even though it looked really, really good and initially looked like it was going your way, the market reversed and did exactly the opposite, and even though it was a break-even trade, it was just frustrating. So that's the topic for today, is that markets can be frustrating sometimes. But that's why we use position sizing. So when we're wrong, we keep the initial risk small, and when it's frustrating, we come out with break even. So the only thing that would have been hurt is basically your ego or your time for the market not doing what you anticipate. But again, this is the nature of markets. The good, the bad and the ugly, I talk about it sometimes, where you like the old spaghetti westerns in the 70s, where you can get good trades come through, where you have lovely high profitable trades. You can get bad trades come through, i.e. when there's losses, and in this case here you get ugly trades come through that it was not a profit, not a loss, it was a break-even trade, but basically it didn't do what anticipated. So perhaps that's a good way to think about how markets can unfold, the good, the bad and the ugly.